Okay, I'm going to open up my Facebook on my phone. So if we have any questions like we did last time, which was great.
Yeah.
Okay. All right, mister. So what's new in your part of the world? So, well, actually, let me reintroduce ourselves to anyone who's going to be watching this today. Reba Haas of Team Reba, Remax Metro East Side, and the radio and podcast show called Open House with Team Reba that you can find on your favorite podcast site like iTunes, Spotify, Stitcher, you name it. A lot of them out there, but you can just Google us and listen away to a lot of great material. But besides that, I got this guy over here.
Yeah, Eric Aasness from Homebridge Financial. Happy Friday, everybody.
Yes. So since they're probably not going to say anything right back to us, except for maybe in the comments, let's just jump into this because we had some pretty interesting, details come in on our Tuesday broadcast, right, where you were discussing what was going on with employment numbers, oil, everything else that was kind of impacting the markets, and of course the Fed being very much engaged with what was going on with interest rates, with quantitative easing and that kind of stuff, right?
Right.
Where are we? It's the end of the week. What do we have to look back on now?
Well, so I guess first off, the interest rates have stayed relatively stable this week. We actually drifted just a little bit lower.
Oh, wow. Okay.
So that's the good news part of everything. The national average is right now for a 30-year fixed rate conventional mortgage, 3.25%.
Okay.
So I think we're down about 1/8% from maybe the beginning of the week.
Yeah, I'm going to grab my chart that I.
Yeah, you've got your high tech chart there.
What's that?
You've got your high tech chart.
It's so high tech. You know what? Things are moving fast and furious. You got to be able to adapt. And I'm sorry, technology doesn't always work for me.
Absolutely.
Okay, so you said it's at what today?
We're sitting at 3.25.
Okay, and on April 21st, it was 3.375. So
Right. So yeah, we're down about 1/8%. FHA, VA, right around 2.75% for a 30-year fixed rate, which is still just mind-boggling.
2.75?
Yeah.
Okay,
so those are about the same.
That's the same.
And jumbo 30-year fixed rates, those are loan amounts in King, Pierce, Snohomish County, anything above 741,000. We're still up there a little bit, 4.25 without any points. So about the same for jumbo financing. In my world, in the mortgage world, a couple things going on. The biggest is the still talk on the whole forbearance thing and its impact on our industry.
Right.
The Federal Housing Finance Administration, FHFA, has been trying to assist loan servicers with forbearance. What they've come out with is kind of more on the loan shark end of things. But basically what the government has said, Mark Calabria there, has said that they will purchase mortgages from lenders that are currently in forbearance. But they're going to charge us 700 basis points to do that. The math on that, if I had a $300,000 mortgage, 700 basis points would be $21,000, which means that if we, as a lender, make a loan and immediately, just even before the first payment's made, it goes into forbearance, we're either stuck with that loan on our books, which causes a massive loss, or we can sell the loan to FHFA for 700 points or $21,000. To put that into perspective, the typical loan profit on a mortgage is about a half a point, about $1,500. So it's not pretty, and that's where it kind of comes into the sort of loan shark end of things. So as a lender, what do? We can take our chances. We know that a certain percentage of our loans will go into forbearance, and that's the program is there to help the consumer. What's hurting us right now is if a consumer refinances and then immediately just never makes a payment, they go straight into forbearance, and it's a huge risk that lenders are facing right now. One solution is that we price that in, that a percentage will be doing that. We spread that out over everybody.
And that's just on new loans?
It's on new loans being made. Existing
Okay.
loans in forbearance go into forbearance. The way that program is working for existing loans, let's say you already have a mortgage, you go into forbearance. Um, the servicer must make payments to the investor for at least 4 months, and
Mhm.
then and after that, so have to make payments for taxes and insurance. And then at some point in the future, we'll be compensated back by the government for those loans in forbearance. But for a new mortgage being made, super risky for us right now. So you will see
So
lenders in their
how's
guidance.
it showing up besides just the fact that it might be in the fees? Is it also about the qualifying factors?
Well, yeah, it hasn't shown up yet. This is all, everything's so
Okay.
fluid and changing. This is new developments this week. And so what we may see is a couple of different things, and this will vary from lender to lender. You may see lenders increase their pricing a little bit to absorb the cost of that risk.
Explain what you mean by that, because
Yeah,
everyone, you know what it means because you're in the
right,
industry.
right.
Nobody else knows.
What it means is that you may see the rates go up about 1/8%, something like that. And
Okay. Which over the, I mean, yes, it costs something over the life of the loan, but you just got done saying
we're really
what those rates are.
ridiculously low. Yeah,
Yeah.
yeah.
So
Mhm.
I'm kind
Right.
of the
Well,
what?
okay, but here's the other thing that could happen.
Okay.
The other thing that can happen is a lender may close your loan, hold off selling your loan to the secondary market until after you've made your first payment. Then we
Okay.
don't have this risk.
Right.
If we do that, let's say that we close your loan and we hold off selling it and you don't make your first payment, you don't have a government insured loan. And in which case, if you stop making your payments, you may not be eligible for any forbearance program.
Okay, but all right, let's go back into that though.
Yeah.
There's you got a lot, as a lot of people like to start saying, you got a lot to unpack in there.
Yeah, there's a lot
So,
in
um, seriously, what do you think right now is, you know, the mathematicians or statisticians are having a field day right now,
Yes.
right?
Sure.
Those guys are, you know, actuarial tables out the yin yang, I'm sure, at the
Yep.
moment.
Yep.
So, but what are they, I mean, they can run these scenarios, but they really don't know what's going to happen. But what do you think is showing up in that? What do they think the percentages might be that would actually happen?
Well, yeah, I mean, it varies depending on the tranche of loans and also from lender to lender. But what I can tell you right now is that we have upwards of, I think what was my latest statistic, 6.4% of all mortgages made right now are in forbearance. And I don't know what the percentage would be of new loans going into forbearance. I know what the statistic,
That's that
yeah.
number has definitely gone up, because when we were
Yeah.
last discussing that number, it was in the fours.
Yeah, this has been a big week for that. Pretty much a tidal wave of it,
Yeah.
folks going into forbearance. So we don't kind of know, sort of looking forward. I mean, I know my own statistics, our own company statistics, and we've got a fair number of them that we weren't expecting. Of course, that did go into forbearance. Folks lose their jobs or get laid off or furloughed, and that's what happens.
Yeah.
So it's developing, but it could be a fairly significant number, impacted by this. So
Right.
we're watching that one really, really closely. As a consumer, what can you do about it? Nothing really. All we say is if you do refinance, your refinance closes, please, please, please make your first payment. At
Right.
least make your first payment. That way you'll be
Right.
helping out your lender, significantly. So
Well, not just their lender, like you just said, it wouldn't be covered, so they're helping themselves too.
exactly, absolutely. And
Right?
another thing to point out,
Because I got to say, like, Eric, I understand what you're saying, but the general consumer doesn't trust a lot of banks to begin with, especially
right,
after the housing crisis. So when you
right.
come at it from the standpoint of the lender's point of view, some people are like, well, screw you. Who cares? I don't
Oh, I
care.
know. I'm being
So,
very
so
transparent
I want to
about
make
this. Just
sure that we're like,
explain.
you're not doing this as a singular focus. You
No,
just got done saying it's for your own benefit too. Please keep that in mind. Don't think screw the
well,
man. Like that's because you could
well,
just screw yourself.
Because the better everybody is able to do on that, the better the interest rate environment. That's the most
Right.
important thing.
Yeah.
So
And if we want to keep our economy moving forward,
exactly.
housing, which covers upwards of 17% of the GDP in the United States, 50% in Canada.
Right.
It's an insane amount in Canada.
Mhm.
So, you know, being thoughtful and aware and understanding this stuff, I want to make sure and invite the people who watch this and who share it, which please be sharing this, guys. You know, don't just like it, please share it. We're talking about some really serious topics here that are really helpful. I've got watchers actually all the way in Manhattan. We've got people who like work on Wall Street watching our stuff now.
Oh, awesome.
And they are talking about, this is great information. And I'm not blowing smoke. You know, there's a reason why this guy over here has been my co-host of educational forums, radio show, Facebook Live, all of that, because he gets it. He 100% gets it. You don't get this from everybody. And so what we're talking about right now, very relevant, very real. You know, you and I both know that we have people in the commercial sector who like to watch what we do, because yeah, we might work primarily in the residential sector, but there's a bigger thought process going around behind all of this. I'm watching really closely what's going on in the commercial markets right now of real estate and construction, because that is, you know, as we continue on and they have construction shut down, it's going to hit more, because everyone I'm talking to, generally speaking, is concerned about the residential market. But we need to be very seriously concerned about what's going to happen on the commercial side.
Well, that's the next big tidal wave that's going to hit. Yeah, as many businesses have not made their April rent payments.
Yes, and they don't have the same programs available to them
Right.
as we do in the residential sector.
Right.
So
say one other thing about forbearance though too, because if you are, you know, thinking about entering into forbearance on your own mortgage, please, you know, read the rules, read the guidelines, because this is not for everybody. You are expected to repay, you know, the amount. And so what happens is, you know, if you go 3-4 months in forbearance, that amount that you didn't pay has to be repaid typically over the next 12 months. Or you're looking at maybe requesting that your loan be modified, or possibly you refinance your mortgage, you know, to refresh everything, which I think will see a lot of that happen.
Some people are assuming that those payments just get put at the end, but you're right. Every lender is different. So don't let your buddy down the street tell you what they did and assume it applies to you.
Really important to look at that document. If you do get a document and you don't understand it, because it is written in banker, always you can send it to me. I'd be happy to take a look at it, and I can translate it for you.
Yeah, absolutely. And I mean, that's why I always make you also explain yourself a lot of times, because sometimes you talk in banker and I know you can't.
Try not to. I'm holding back on my acronyms. I could throw a bunch. I could do this.
Well, no, not even just the acronyms. Sometimes there's just terminology in general that, you know, like you and I talk all the time about things like TRID, and everyone else is like, what? We're like, you know, we make the joke of it's the reason I drink, but it is. It's a disclosure requirement. But yeah, so I just, you know, I'm always trying to make sure, like when we're having these conversations, that we're keeping it real. I'll just say I had and I want to make sure our audience knows how smart I know you all are. Okay. I actually had someone just the other day who was telling me, because he happens to work in technology, and so it's systems process engineering. And I asked him what he did, and he started telling me, and I was like, is that from the marketing that you guys have for your company? Because you said nothing. You're like, absolutely nothing. And then at some point, I finally was like, what kind of customers do you have? And he went, well, I work mostly by referral. Again, I wanted to throw up. And I'm like, not what I asked you. I said, who are your types of customers? Finally got out of him, aerospace. Yay. Okay.
There you go.
So then we talked about that briefly, but I will tell you, here's the thing I will never do to the people who are watching this. he started to describe a process engineering thing he was working on. He said, let me take it low level for you. Which I'm sure, Eric, you can imagine, had I been able to punch him in the throat, I would have. Okay, because it's like, really? I'm not a violent person, but I was like,
That would have been fun to watch. Yeah.
I'm sure my face should have
Yeah.
probably showed it. But I just want anyone who's
Coffee
watching
while you're at it. Yeah.
yeah, the thing is like, we know you're smart. We're talking about some big topics,
Yeah.
really big topics. This is the stuff they're not telling you on the nightly news.
Right.
Okay?
Books will be written about this in a couple of years.
Yes,
What
if
we're
they're
going
not
through right now.
already, while changing, they're like chapter 1, here's what this did, but we're talking about very real, salient, usable, functional information right now, things that you can use, things you can go out in the world with, things you can be talking to your family and your neighbors about. Share this with them. Share this with them. Don't just let some guy blow smoke about his one thing. This is coming from a much bigger perspective and with very real good recommendations. So, I mean, again, Eric, I'm always so very thankful that we have the kind of working partnership that we have. We all know you're not the only lender I work with, but frankly, I think you're the smartest one I've got out of the whole bunch. And there's a lot of smart people in the industry, but you've been my best and brightest for 17 plus years.
Well,
right?
we sure try. This economics thing is pretty crazy these days.
Yeah.
I try and stay up as much as I can, and I listened to about an hour and a half podcast yesterday from an economist I really respect, talking about why interest rates are not going to go higher, even though we're getting absolutely bombarded with staggering amounts of government debt.
Yeah.
And all I could think of as I'm listening to all of his reasoning is I sure hope this guy's right. Of course, he was a Federal Reserve economist, so he knows what he's talking about. But we've got unprecedented things going on in our economy right now, and it's impacting everybody.
Well, and that's why we're doing this twice a week too, because as you've brought up on a couple of them now, it is very fluid. And that's why we're doing it regularly. We don't want to just do a one-time thing. In fact, one of the things that makes me a tad nervous about my friends in the real estate industry, because I do happen to know one particular economist who's kind of shouting the same story, and has been for about 6 months now, because here's what I want to tell people. Even before we had the virus stuff impacting the market, we already had conversations about whether or not we might be going into a small recession.
Right.
And so there's a lot of people. In fact, a very good friend of mine from a different marketplace just posted a video on LinkedIn that said, recession does not equal housing crisis.
Right.
But that was also that conversation that started with that economist and that coaching group started pre-virus and pre-mass amounts of layoffs.
Right. I'm glad you brought that up too, because a lot of people are saying, well, right after we get over this, we're going to boom. And maybe so, but maybe not. They talk about it's called a V recovery, where you go down really fast and then you recover really fast. The problem is that we were already slowing down just a little bit, as you said before this. So once we get out of this, it may not just be, all, butterflies and rainbows. We still have some hard work to do as our economy recovers.
If you take it all into account, if we're saying we've got, high levels of forbearance, which hopefully, I mean, this is the thing, hopefully, knock on wood, those same people who are in need of that right now will be able to get back to work. But what if they can't? And then we have a different story, right? So that's what we're looking at, is these chapters are being literally written as we move forward. And we're watching very, very closely the different steps that are being taken, and then trying to kind of weave them all together to say, what do we think, right? What do we think might happen? We're trying to put a lot of critical thinking inside of this. We're looking at, if unemployment does stay at a high level, because we have been having this conversation even in my own team, not everyone's going to get back to work.
Not right away.
We have a lot of restaurants that may fail And thank goodness there are so many resources out there. There's, the online tip programs and things like that are attempting to help people. But there's an estimate of possibly upwards of 70% of all of our restaurants going out of business because they won't be able to weather this storm depending on how long it goes.
Mhm.
So, when we have this situation and we may have a significant number of folks in the workplace not able to go back to work, in my team, we're talking about this is the time. And here's just an employment recommendation for anyone who is blessed enough to still be working right now. I got to tell you what, you best be getting off your fanny and being the most productive worker, whether you're at home or on the job site, that you could possibly be, because this is what separates the busy workers from the productive workers to the eyes of management.
Mhm.
And they will make decisions based on that because they cannot carry dead weight. And that, and those folks who may have trouble keeping that job may have a hard time finding that there's a role available for them when we get back, because we might be having business come back, but it may not be at the same pace and there may not be enough jobs. And anything that can also be replaced with technology right now, you bet your patootie somebody's going to do it. A lot of somebody's. So now is the time to be, working on your skills. Now is the time to be showing your skills or asking for assistance to be the best that you can be in your own workplace. Because honestly, these kinds of situations require management teams to have to really, really look closely. And it sucks to be on the losing the job end of it, but it's also painful for the people who have to make those decisions about who goes, because this is a human issue. It's a human issue and it hurts because people will be impacted.
Absolutely.
They will be. And it's not just them, it's the butterfly effect of everyone around them. So, just all we can do is say, if you can share this information, if you can be having these conversations, yeah, they're deep, but you know what? It's a lot better than some of the dumb memes I see going around. You got to have a balance, right? We need to keep our humor high, keep our patience and humor and all of that high, but have a dose of reality in there. Have a big dose of reality.
Yeah, don't make your major financial decisions based on memes. That's probably pretty good
Yeah. Well, or fear.
sound bites
That's
or
the thing.
clips or
Fear
things.
is such a big motivating driver. And, it's the big thing that goes on in the human brain, right? We're still animalistic at heart. Our amygdalas freak out. It's fight, flight, or, freeze. And some people have frozen in place. And it's, this is a really good time to be working some mental gymnastics on yourself and learning how to cope. These coping skills that are really necessary right now are a lot of about keeping your brain happy and active and doing things and being productive. And because you can tell the difference. I mean, just getting on social media, you can tell the difference of the people who are laying around and wasting the time, and the people who are out for self-improvement and doing, like you see the people who are like, oh, how many rehab as well as diet programs are going to go underway here. You know what? I got just as many stresses as everybody else going on, but I'm doing my morning routine every single day. Part of my daily routine is, when I get up, I take care of my animals. As many of you know, if you follow me on Facebook, I had the very sad occurrence of having to put my kitty Zachary down yesterday. I have to be careful saying his name because it's heartbreaking for me. But in trying to keep my own mental state, I wake up, I get my dog out, I'm listening to, positive things. I, got my workout in this morning. I'm keeping on track with my physicality. That helps my mental state, my physical state, all of it. And then I chart my day out. I chart my day out. I just had a great call with the people on my team because we're going through Darren Hardy's Insane Productivity. And we came up with some amazing new ways that we can continue improving the way that we interact with our customers. And, because we're actively working. Eric is an essential worker right now. As you can hear, there's a lot going on in his industry.
My office here. Yeah, that's right.
Yeah, I know. So I know I don't have to be like the people on the news where they're like, so you got pants on? Have you seen those? Like, I can't believe how many of those. Yeah, they're like a bunch of the late night hosts are doing things where they're just like, what's with all these news reporters? Like, do you got pants on? You're like, really? Like, I do, but mine are tights. So
my brother just was on a call this morning and he had a suit and tie on,
oh my gosh.
And nothing on below the desk, I'm sure.
I'm sure he's probably in his boxer shorts, I hope, or whatever he wears. I don't even want to know. You might.
That's right.
But
you're absolutely right. And worry about the things you can control, but don't worry about the things you can't. I'm limiting my intake of COVID news and things like that. I've reached the saturation point where I really just don't want to hear anything more about it. I'm watching shows about Northwest salmon fishing and things like that. Give me something to take my mind off of all this other stuff.
Yes, and I do like that they are trying to. Well, I sent you that email that Recreational Boaters Association of Washington is working to try and help open up those things that could be great for mental health. And frankly, I mean, why should people be able to go out and catch some food right now? Like,
put some food on the table. That's right.
Yeah, why not? Why the heck not?
Well, we are the only state that isn't. So maybe if anybody has any contacts down in Olympia, let's work on that one.
Yeah, there you go. Help share the news about that too and try and help get that moving forward.
Hey, one other development I wanted to mention too with as things are fluid here. About a month ago, I did a video that was basically saying, hope for the best, but plan for the worst. Yeah. And where I was going with that was recommending that folks, if you have a higher interest rate, consider refinancing and pull some cash out, pay off your debts, maybe put a little bit of money in the bank. There is a major bank right now, I won't mention the name, but they might ride around in a stagecoach, that just canceled all cash out refinance activity as of yesterday.
Okay.
So again, things are fluid and there will be other banks.
That's very 2008. That's very 2008 of them.
It is, yeah. And there's others that will follow on that. Yeah. So if this is something that you're thinking about, better move quickly on that one, because again, things can change very, very quickly.
Right. And well, and the other thing that you've also mentioned is that those can take 60 days or so to even.
They can. Yeah. It's everybody's pretty busy right now. We're doing pretty good right now in our office, and all my staff's working from home. They're doing an amazing job.
Yeah. I've talked to several of them. They're doing great.
Yeah.
Speaking of which, I do want to point out, this was a document that we got here in my team from First American Title and Escrow. They're not sponsoring the show, by the way. I'm just letting you know who it's from. But this is a guide to e-closing and e-signings. For those of you who are still involved in or wanting to get in real estate right now, we do have ways. Not only are we doing virtual showings, not only are we providing more 3D, like I have a new listing coming up, so we're doing a 3D and all the other stuff so that we can have the most tools available for someone to be able to see our properties that we're listing for our clients. But we are also now, most every escrow company out there, because in Washington State, because I mean, for those of you in Manhattan, you're different because you guys do table signings typically with attorneys. We are an escrow state, and so we typically do them through escrow offices. They have, in most cases, Anna was for you, set up the virtual signing process. And I know we're sending out notices to each of our customers who are currently under contract so that they can begin to understand the process. Our team is learning the process at the same time, but these are possible. So we are still moving forward. We are still helping keep people in houses and moving to new houses and doing, and achieving their goals. So the industry has done its own version of a pivot to make sure that we can accommodate. And so, we got you covered. So if you have questions about it, please feel free to reach out to me, info@teamreba.com, or to me directly if you want at reba@teamreba.com. My cell 206-910-3429. Eric, you want to give your info just in case anybody has questions for you?
Sure, happy to. Yeah, email is eric@ericismybanker.com, just ERIC. And my phone number 206-915-3742. That's 915 Eric.
And Jonathan Frizzell, hello. How
Oh,
are you out in Bremerton? I'm sure you're loving your sunrises and sunsets.
I bet he's probably wearing a bow tie and I
He
don't.
might be wearing a bow tie even in his home office. I don't know. You're going to have to show us that, Jonathan. Take a picture and post it on the Facebook there for us. So, and just FYI, I know we said talk about sharing this. We are also taking each of these videos and putting them out into our social media presence. So this can be found on LinkedIn. We have it posting to Instagram now. I believe we're able to get it on Twitter as well. So, lots of different ways to share it. And seriously, if you guys are liking the content that we're putting out, please give us some thumbs ups or hearts, any of that kind of stuff. It's great for us to know that you're seeing this, understanding it, and we're getting impact out there, because that's why we do it. It's not because we just love sitting here, talking to ourselves. Eric and I have always been 100% focused on education. And this is just one other way in which we can provide that and try and reach a bigger audience than just the people we talk to on a daily basis. And we talk to, lots and lots of people every year. I mean, we're dealing with hundreds and hundreds of clients every year, but we want this to get out to thousands, if not tens of thousands of people, because these messages need to be heard. They need to be the counteract to the stuff that's on the nightly news that isn't giving you practical information on how to deal with all this or to understand how it might personally impact you. Okay. So, you got any other tips or feedback that you want to give to anyone? Because I mean, right now the real estate market is just staying the same. It hasn't really shifted much in the last 3 days. I will say we did see an uptick in pendings this week. Mm-hmm. So with us being back to limited essential services, we are seeing an uptick in the buyer activity. So if you are thinking of selling a home, there's buyers out there. Don't be timid. Don't be timid. What you want to do is work with someone like me who does a great job of qualifying the buyers who are coming in and their agent. That is just as important. And their lender, also important. So you need people who can be all over that. So, anyway, I was asking if you had anything else you wanted to share, Eric.
Oh, I'm good. Yeah, I think those are the biggies. It's just lots going on. It'll be different again next week as well.
Yeah. And if anyone has any questions they want us to answer when we do this again on Tuesday, put a note down below, send me a private message, however you want to handle it. And we'll be happy to address those questions. Okay. So Eric, thanks again for your time.
All right, thank you, Reba.
Yeah, everyone who's watching this, thank you for your valuable time. Hopefully you've learned several things today or stay positive, get your morning routines, let's go kick some butt together and kick some COVID as much as we can on our own. Okay.
Right.
All right. So be safe, everyone. Bye.